Hello, it's Robert Miner with Dynamic Traders Group with this week's brief video for our YouTube subscribers and our Twitter followers. What we're going to take a look at this week is the gold market, because I believe within a few days, maybe it might be a week or so, there's going to be a great setup in the gold market with very high probability and low capital exposure. So we're going to take a look at that. We're going to take a look at the specific conditions that'll set that trade up in the days ahead. So as usual, I just want to tell you, we don't forecast here. We identify conditions with a high probability outcome where we can develop a specific trade strategy with acceptable capital exposure. So we're interested in trading, not forecasting the future. If you like what you learn and what you hear in these videos, please subscribe so you'll be alerted to every time we put a new one up, because they're always current, they're always relevant, and there's always something to learn. Like us also if you think it's helpful, and check out our DT reports at dynamictraders.com. Okay, let's get started and do a deep dive into the current position of the gold market. Well, this is the gold weekly data. Let's take a look at where we're at so far on the weekly data coming off of the March high. Just this beautiful textbook five-wave decline, a five-wave impulsive trend. And when I mean textbook, I mean Elliott Wave textbook. It completed in late July, right at some significant time and price targets, as well as the momentum cycle made a bull reversal. So that's fairly significant. And what it means is that we should have at least a 4 week or so, 4 to 6 week corrective advance. Now keep in mind, I'm taking this from the perspective that gold is making a corrective rally against this five-wave trend. I can show you more data, and I can make a case that it's beginning a higher time frame bull trend. The point is, that's not relevant for a trade. What's relevant for a trade, we want to position ourselves for a trade that will probably last 2 to 3 or 4 weeks. And if it ends up being a higher time frame trend, we're positioned for that. We'll be able to discover that as the market unfolds. But right now, I want to look at every opportunity to get on the long side for at least a few weeks net bull trend, which will probably reach around the 50% retracement and will probably not be complete prior to around the second week in September. Now, why is that? Well, if we're just making a correction against this five-wave decline, well, typically a correction against a completed five-wave impulse trend will reach at least the 50% retracement. Now, it may go much further than that, but that would be a minimum expectation. And if it is making a correction against this five-wave trend, is that very typically a correction would end around the extreme of the wave 4. Now, the wave 4 extreme is right in the midst of the 50 to 62% retracement. So we're looking at that as more or less our minimum expectation on the upside. And typically, a correction against a five-wave impulse trend would not be complete prior to the 38% time retracement. Boy, fib timing is as important as fib price relationships. And alternate time projections, expansions, and time retracements are all really valuable to look for minimum and maximum time targets for trends and counter trends. So what we know so far from the weekly chart is that the weekly momentum cycle is bullish. It's not overbought. We should have 3 to 4 weeks anyway left net bullish trend just based on the momentum cycle, based on the Elliott Wave time and price, I should say Elliott Wave and fib time and price, is we'd be looking at a minimum of a correction that should reach around the 50% retracement at 1894 and not be complete prior to early September. Now, if this is a higher time frame bull trend in the initial stages, well, the sky's the limit, so to speak. But what we want to do is get positioned on the right side of the market. Now, sometimes we're able to pick the bottom or pick the top. Other times we use what I call the Gann strategy, because Gann stressed throughout his writings is that the safest time to enter a trade is on the initial reaction against the new trend. Well, in Elliott Wave terms, that's a wave 2 or a wave B correction. So if we can identify the end of a correction when a market's in a position to end that correction, what follows the end of a correction? Well, a continuation of the trend prior to the correction to a new extreme. So let's ratchet down to the daily data and see where we're at and develop a specific trade plan and a specific strategy to recognize when a correction may be complete. Before we get into the details of the probable trade setup in the days ahead, I just wanted to let you know for just the next few days until August 14th is that we have a very special offer with our DT reports and a 1-month trial. That's every issue, every educational video, every analysis video, everything that we give subscribers for a full month for just $19. So again, it's only available for the next couple of days. I haven't offered a trial month like this for over a year, so this is the time if you're interested in what we do and what we have to teach you to check us out at dynamictraders.com and then hit the DT Reports tab on our homepage. Okay, let's get back and take another look at the details of a probable setup for gold in the days ahead. Well, this is the gold, the December contract, and it's the daily data. Well, just the high on Wednesday, I'm recording this on Friday, the 12th, but the high on Wednesday looked like just a very nice 5-wave advance to complete a wave 1 or A. Now, we don't know if that's the case yet or not, but what we can say is as of Wednesday's high, gold was in a position to complete what we call a daily high, and in this case, a wave 1 or A high, which would typically then be followed by a 4 to 5 day or so correction to complete a wave 2 or B correction. So if this is a wave 1 or A high, typically we look for a retracement, again, to around 50%, that's 1760, and typically it wouldn't be complete until about August 17th. Now that's next week. I think that would be next Wednesday or Thursday. So more than likely if gold has completed a wave 1 or A high is that it'll be sideways to down into around August 17th, if not later, and reach around a 50% retracement or so. So if gold reaches those levels and around that time, and if the daily momentum cycle, particularly if it's reaching oversold, we'd have time, price, pattern, and momentum all in a position to complete a correction. Now you see, I don't know if that's going to happen at all. This isn't a forecast of the future. But what I do know is that should gold do that, it will just be in a wonderful setup to position on the long side for the completion of what we call in Elliott Wave terms a wave 2 or B, and then continuing the bull trend to a new high to those minimum targets that I showed you on the weekly data. So that's what we're looking for now in the gold market. So check it out, follow it up in the days ahead. If gold happens to be sideways to down into the middle part of the latter part of next week and reaches around 50% retracement, and whatever momentum indicator that you use, if it's in a position to be oversold and complete a low, is look to develop a specific go long strategy for the probable continuation of the bull trend to a new high. So that's what we're looking at in gold in the days ahead. Well, that's it for today, my friends. Please stay safe, stay healthy, and I'll be back in about a week with another video. So take care. Robert Miner over and out for now.